Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and it's your daily midday market minute. A blowout ADP report this morning. But before we get to it, if you're watching this on YouTube, please click the link below and subscribe. Like and subscribe. If you're watching from our website, there's also a link below to direct you to YouTube, and you can subscribe that way. We'd love you to follow us. We'd love you to help us build our following. All right, let's get to it. Yeah, ADP payrolls blowout report. 497,000 jobs added in June. This is the largest job increase on ADP going back to January of 2022. It just doesn't make a lot of sense with the trajectory of the economy, but 232,000 jobs were added in leisure and hospitality. We saw 51,000 jobs lost in financial services, professional services, and information services. If you take that 51,000 jobs, I mean, the jobs that are being added to leisure and hospitality are coming from somewhere. My theory would be that you're seeing people get laid off in some of the professional services jobs, and they're not being calculated in this number. They're still receiving severance. They're still receiving on some sort of compensation, but they're staying on that payroll. But then they're going and getting another job basically immediately, whether that's a Starbucks or a Marriott front desk or something that's then almost having this person count twice in these reports. To me, that explains quite a bit of the distortion we're seeing. But at the bare minimum, this sets a very high bar for tomorrow's non-farm payroll report. Before we get to non-farm payroll, one of the good things I think that came out of today is 9.8 million jolts. So job openings, they're looking for just about 9.9. Came in lower than expected. So at least they're adding jobs. It's reducing that jolts number. ISM services came in pretty strong. So in May, it was down below expectations. And then, we saw this sort of bounce back. Services just continues to be a strong part of the economy. But the jolts numbers sort of help offset that a bit. We saw the 2-year yield spike to 5.1 and change. We're back down about 503. If you go back to last Thursday, the 10-year yield has gone from 4.7 to above 5%. We've seen more than a 30 basis point move in the 10-year yield. This is, I don't know if this is some sort of capitulation, because remember, it's the prices that are selling off. The futures, you got these futures just melting away. I talked about yesterday here in the midday market minute. So is this some sort of just buyer strike? I mean, this leads to the non-farm payroll. And is it non-farm payroll going to come in hotter than expected? Right now, I mean, the expectations are 225,000. That's basically what the expectation was for ADP. Now, the difference between ADP was they were about 267 in the May number, and we saw 335 from non-farm payroll in the May number. So there could be a little bit more balance here. But again, 497 as a headline number sets an extraordinarily high bar for tomorrow's non-farm payroll report. On top of that, you look where the jobs are going. They're coming from professional services, 51,000 lost, and they're going to leisure and hospitality. Wages have to come down, I would imagine, have to come down. They're looking at month over month expectations for non-farm payroll at 0.3 increase with 4.2% year over year. If the wages come down and the job growth is likely going to be higher than 225, I mean, but if it's not as hot in that realm of 497 and wages come down, this could be favorable for a risk-on environment. We could see yields back off a little bit. Again, this is a very wonky environment. We're seeing a lot of movement across the board here, but you got to stay nimble. And again, I think, I'll reiterate it, I think what we're going to see tomorrow is a very high bar being set from today's data, and that's something that non-farm payroll is going to find it very tough to really meet those expectations. So what we could see is the S&P, the NASDAQ, those futures, even the S&P futures coming off those lows. We're already coming off the lows just a bit here. How do we finish today is the question. Big level of, let's say, 44.35. We've talked about that level, rare major four-star support. That was the close going back to last Thursday where we opened higher, the final day of the quarter. And there was a gap there, so we blew through that. Traded to a low of 44.19. We're back to 44.40 here. So the final couple hours of today's session will be critical. Where do we close? Like to see this close back above 44.35, where we are down there now. Now, there also is some good resistance, previous resistance, then it was support, about 44.55. That's going to be a level to keep a close eye on. If we get back up to above there, I talked about that in the Morning Express today because the market was already lower. If we close back above there, we can start to see this really start to neutralize today's sell-off and set the table for a good rally tomorrow. The NASDAQ above 15,200 right now. Close back above, say, 15,270. Same thing. Really neutralize today's weakness. Didn't go as deep of a sell-off in the NASDAQ as say, the S&P did. The Dow futures are down more than 1%. They're down over 400 points. The E-mini Russell is getting crushed. That's down about 2%. With the yields rising, you got some downgrades on some of these regional banks that put pressure on things. But yeah, again, it's all about non-farm payroll tomorrow. How do we lead into that, and what does that set up? I think the bar is raised pretty high to have a hot report, but we'll see. And then crude oil, crude oil is actually turning positive as I'm talking right now, trading to a low of 70.22. We had a fairly bullish headline report. Again, a lot of things are coming off the lows here right now. Now, where do they close is the question, but retesting 72. The high of the day was 72.34 overnight in crude oil. Again, fell down to a low of 70.22. About 1.5 million barrel draw, more than just under the 1 million draw expected. Gasoline also drew more than expected. This helped get a little bit of a tailwind and lift crude oil off the lows here. Gasoline turned positive first. It's almost up 3 cents on the day now, coming off a low, about 8 cents off the session low. Just some wild volatility we're seeing, but what's new? And then the metals. The metals were just bludgeoned. I said exactly that. Bludgeoned on that ADP report when I wrote that in Morning Express. Gold coming off 1908.5 low. That is major 4-star support. That level that aligns 1906 to 1911 back to the 2011 high. The fact that I've said this before, the fact that we went up, retested the record high, came back down. Now we really need to hold this in battle at this 1911 level, which was the 2011 high. Silver down about 50 cents. Silver had some good price action overnight. Just again smacked hard on that number. Platinum as well. Copper's consolidated pretty good, but a lot of volatility. Watch gold for the signal here as we go into tomorrow. If this report it underwhelms, I think then gold could be right back to the highs on the week. Our team is here to help you navigate, though. Give us a call, 312-278-0500. Remember, futures trading involves substantial risk of losses, not suitable for all investors.